Well, I'm on your pond. I mean, I'm on the other side of the pond, but I'm in your pond, so it's you know, it's
So
good.
it's
It's a little nippy actually. It was warmer last week when I was in Greece. It's a little cold here now, but yeah, we say the same things as you guys. So I'm looking forward to hearing everyone's view of that.
all right. Well, I'm going to go ahead and we'll take over and we'll start talking about this view of that, because if you can all see my screen, I thought this would be fun to put up. This came from Bespoke. It was on their Twitter feed this morning. And like, we had that big reversal day, and that didn't feel too good for a lot of people, and maybe took some people by surprise as well. And it, typically is this kind of sign for some downward momentum. And but when you take a look at the screen, it's like, well, yeah, there's a lot of reversal days, but what do you think about all of it? One thing I was noticing is that it's like, if you can see my cursor, where it's like you have this build up, you have this pullback. I'm thinking of you, Jeffrey Turnmeyer, when I think about the Fibonacci kind of halfway mark. It's like it pulls back from here, comes down, goes up a halfway, starts to have some support resistance areas, come up to the same high, comparing the 2000 area to the 08 high, and then kind of the same kind of things. But you can kind of see some patterns, but whether or not you can go sell the farm, I don't know if you go do that. But I just thought that was an interesting look. And we've had Fed announcement, and really the day yesterday, that was the day after the FOMC announcement. And then of course we've had a lot of earnings, a lot of things going on. There's a lot of risk in the market. We all know that. And that's why we come here week after week, because we want to get into your brains and find out what you're doing, because you guys are doing a lot of things right. Like, I mean, we may be talking about some 52-week highs, but how about 52 winners in a row, Jeffrey Turnmeyer? Okay.
Hey.
I want to talk about that. Forget the 52-week
Yeah.
highs. I just want the 52 winners. And so we'll talk a little bit about that, and maybe some things that you all have not been thinking about, some companies that have kind of gone way into the background that you might want to start thinking about again, and just how we navigate in these markets. Like, so Ray, when do we buy? When do we sell? And I can't wait to hear from Guy Cohen on that, because he's got some fantastic reporting on that as well. So let's just kick it off, and let's just start around the block here and find out, what do you guys think, first off on this, on yesterday's action? Is it going to continue higher? Do we need to be cautious? How do we view this market? Guy, why don't you tell us first?
Am I showing my screen yet or not?
Nope.
Is this my segment or not the
Nope,
segment?
it's just give us the answer
we got to
question.
to really get a confirmation. For me, it's very simple. To get a confirmation, we've got to break yesterday's low. So if the S&P breaks yesterday's low, there's a far better chance of it coming down. If it doesn't, then it was just one of those noisy, crazy days. So let's see whether we get confirmation, and then we can decide.
Yeah, sounds good. And what are your thoughts, Jeffrey Turnmeyer?
Well, I mean, I put a 4,600 level right on the chart during Ask the Pros several times, and we came right up there and got a little lightning yesterday. And do we go retest it again, or do we get the continuation like Guy was just talking about? This is the big question. I mean, for months I was sure that we were going higher. I was sure we'd hit 4,300. Then I was like less sure we'd hit 4,600 just right off the bat without getting any kind of pullback. We're still adding tally to that number of trading days since we've seen a 3% pullback in the market. As I talked about, what was it, last week or maybe the week before, the average is 47 trading days between 3+% pullbacks in the S&P 500. And that's since World War II. It's not like in the last 10 years or something like that. That's since World War II, like all the pullbacks, like hundreds of pullbacks. And the average length of time we run in a bull run is 47 days, trading days, and we are sitting above 90, and maybe 100 today. That's pushing top, more than top 10% of bullish runs. The longest one we had was about 300 days. So can we go further? Sure. I mean, it's entirely possible. We could set a new record, 400 days. I mean, that'd be like 2 years without getting a pullback. That'd be ridiculous. But it could happen, and I'm expecting a pullback because I go for high probability things. The high probability is that we see a 3+% pullback, maybe upwards of 5 or 6%. And so I'm just kind of waiting for that to happen. I may miss the move. No FOMO here. I'm just waiting for the high probability things.
Good, good, good. Well, looking forward to hearing from all of you. And to your point, Ray, how do you have confidence to get into the market, long or short? So listen closely, because I think you'll get some really good tips from these guys today. So, well, what are your thoughts, Scott, on these markets today?
Well, busy week this week. 8.2 million companies reported earnings. It's not that many, but seems like millions of companies reported. And of course, we had the Fed. And I don't know how anyone else feels. I am so sick of worrying about the Fed and what they're going to say. I have Fed fatigue. However, that all being said, nervous. We finally got what we wanted as a bull, right? If you're a bullish person, it's like, wait, inflation is cooling and the Fed is going to raise one more time, but wait, maybe not anymore. It's like, all these worries and all this angst I felt as a bull, because I am long, I'm not short in the market. I have live positions that are long. And I'm like, finally, can we just have a normal bull market where everything is fine? And then article comes out, important analysts saying we're going to see a 64% drop. Oh, wow, that's great to read. And then, of course, the Fed comes out and they give us exactly what they want. I'm like, I'm not going to listen to that silly old article. And what happens, and Jeffrey mentioned it, we had this huge reversal at the end of the day where everything's going along green, and then very, very red. And it's like, it was absolutely harrowing.
Yeah.
If you're going to be emotional and you're going to worry about things, smart people are saying we're going to drop. We're way overbought. It's been a long time. We shouldn't be going up like we are. And then we saw this drop. But I guess my point, and I'm going to show when I show my charts later, I always try to think, what would Nicholas Darvis do, right? The famous book by Nicholas Darvis. Yeah. And that guy traded traveling the world with a weekly Barron's, right? Isn't that right? Like he got his news once a week. And the truth is, if you look at a chart of the SPY, even with that terrible day that's so scary yesterday, if you look at a weekly chart, there's nothing. Like nothing happened. If you just woke up on Friday after the close and looked at the chart, it's a nice green bar. Like there's nothing, no news events or whatever. So bottom line is, for me, all this stuff makes me scared like anyone else. But when you look at the long-term charts, it's kind of boring, right? Yesterday wasn't really anything. It didn't change anything, but it's not to say I'm not worried about it.
Yeah, sure. Perspective is good. And I like what you said, about well, if I'm going to be an emotional trader along those lines, hey, Guy, let's let you share your screen now, because tell us, are you an emotional trader? Do you trade by your emotions, or what do you look at?
I'm a quantity guy, as you know. Yeah. But I know I've got very limited time here, so I'm going to whiz through it. But our approach to the market is very pragmatic. It's market timing, stock selection, and trade plan. Now, I know, Celeste, you wanted me to say something about market timing. Yeah. If you follow us at all, we're pretty good. These are the market timing kind of perspectives we've put out over the last year or so. The arrows signify the direction. Now, we're not always right. Of course, we're not always right, but there's a good, healthy proportion there. I think you'd see from September when we started counting onwards, and then about a year ago, and then this is what we've been doing this year, nearly all bullish this year. Obviously, the next thing is like, what now? Big question mark. So I'll go into that in just a minute. But you asked me to go through some stocks I went through last time and give you a perspective on market timing as well. So I'm going to speak quickly. Watch the recording if you want. So what we do for market timing, we have what we call my OBI dashboard and OBI market timers. I'm going to go into it very, very quickly right now. So I'm going to go into my website and let's see what we can do. So I look at these pies. Each one of these pies, when you go into it, gives you a little more detail. I look for mean reversion on a couple of my pies. So this pie here is the number of OBI stocks that have crossed the threshold of OBI behavior. And if I click on it, I get more detail on this. And what I'm looking for specifically, without going into detail, is a high number of greens and a very low number of reds. We're not quite there. Even now, we're just not at these other levels where we have mean reverted in the market. The silver line is the S&P. So you can see these peaks that we got to. They actually then were the catalyst for a move down the S&P. We're not quite there. We're agonizingly close. It's not quite convincing there. And then if we go to another pie, which is, let me see if I can figure it out really quickly. Actually, here's one I've opened up earlier. So I'm going to close that window. I got them all open for you so I can get this done on time. This is what we call the 200-day moving average pie. This is, again, another mean reverting scenario, which I like to see when more stocks have recently crossed and held their 200-day moving average. It tends to dovetail with that other mean reverting pie and then stimulate a move either down if the greens are very high, or up if the reds are very low. And what you can see here is we're nowhere near a mean reverting situation. Now, all that means is that these indicators right now for me aren't giving me any story that I would like to see. So I'm going to close these windows off as I go along so that we can just keep moving along. So the other thing I have is what we call market timers. And yesterday's bar is this bearish engulfing bar. Now, typically when we are overbought, and price-wise we are overbought, many stocks are overbought, the indices are overbought. When we typically get one of these oversized bearish engulfing kind of bars, open high, close low, that's going to be the start of something moving forward. It may not be it. It may trundle around a little bit, but I would suggest that this being almost post earnings, going into the after summer period is the start of something, is the start of retracement. Whether it happens now or a bit later is another thing. So I would suggest that this kind of area here at the low of yesterday and the low of the last few days is the area below which you could pretty much confidently go short for a little while or do some bear call spreads, because this 20-day moving average is about here, the 50 days here, probably won't go down to the 200 anytime soon, but there's got to be some kind of mean reverting behavior on the indices quite soon. OVI, the options traders on SPY, well, they're kind of neither here nor there. The actual medium-term indicator, which I love, I put a lot of store into this one, is still saying bullish without being overbought. So there's a few conflicting signals, but this I would suggest could be the beginning of something, even if it's not, it's the starting gun. It may not be the time where we break. It might just go a little bit further and then come down. So watch out for those ones, because when you have overbought scenarios on individual stocks and indices, and we get one of those bars, typically that will mean something happens moving forward. I'm moving forward really quickly here. You've never seen me.
Great, yeah.
Yeah, no time for chit chat or jokes this time. Okay, so this is where we're at today on the S&P. You can see you're heavily overbought. We're way above the 20 even. It will come down to that one in due course pretty quickly, I would suggest, as well. Let me just make sure I'm in the right place here as well. I want to go through a few stocks with you now. This is the stocks that a lot of stocks I went through last time, and I'm just going to tell you whether I was bullish or bearish on that one. You can see in my watch list on the right, this is the 7th of July when we did the last one. I did the last one with you guys, and this is today's one. So look at this. So I was bullish on Alibaba. Why? Because my OVI was looking interesting and positive. We were just crossing key levels. I'm not going to go into my strategy right now. We don't have time, but that was, a messy win, but at least a win. Baxter was a win, but look at this. Yesterday, it came down like a ton of bricks. Now, we liked this. We liked it for several reasons. You see this thing called shrinking retracements. If you look at that, and that's shrinking downward moves over different time periods. Very difficult to find, but we find them. But what I liked about it is this, with the option sentiment being bullish, we crossed. We could take profits there. That's what we call P1, but then we get stopped out. So at least we didn't lose in total, but you have to apply the trading plan as well. Baker Hughes, a lot of the energy stocks we were bullish on, quite controversial at the time, especially around here, those bull flags on this breakout here. Option sentiment, very, very positive at the time, probably a lot of position building going on. That's the net result. That was not a popular view at the time. Catalent has drifted upwards since that time. That was bullish, only a little bit of drift there. I'm going to show you some fun things in a minute. DocuSign, we've got that one wrong. I said that one looked more bearish than bullish. We haven't been right, but it didn't break out at least. So at least no breakout means no losses. But look at this bar here. And that, I suspect, in due course, will be the catalyst for further downward movement in due course. And this one's got shrinking retracements down and up, so it's a bit confused. But I suspect that it will resolve itself to the downside in due course. Wait and see. We'll see if I'm right or wrong. This is another midstream, liked it, positive, has done well. It's tinkering with another positive move as well. So this is what you wanted from me, Celeste. I'm only doing what you told me to do. Duolingo, we got wrong. We thought that one would be bearish. It didn't go bearish. It's up here, but shrinking retracements on the bearish side, that means it's gone up a while and then up again, but lesser so a lesser percentage move. I suspect that if the market were to just sort of stabilize and just slip a little bit, this will slip down with it. There's not an awful lot of strength there, but let's just see what happens. Fifth Third, regional bank, controversial, but I liked it, and it's just drifted up ever so slightly. I'll show you the impact of options in a minute. Hershey, bearish. We've been bearish for quite some time. If you look at when I've been bearish on this one, from the 24th of June upwards, which is here, this is what you call a waterfall setup, and that's exactly what it did. A really nice trade from there. Really happy with that one. MMP, another midstream. We were bullish here. You can see why: option sentiment, position building, etc. I'll explain another time why position building is so important. Nicola, I love this one. This one we were bullish in that, and that's what happened. That was kind of nice, wasn't it?
Yeah.
You can go back to that that recording and just see what we said. We didn't get everything right, by the way. We don't get everything right. PayPal, I suspect, despite the fact I hate PayPal, I was bullish on them on the stock side. Rivian was a big one as well, percentage-wise. It was already going. There's not much more we can do with that one. Didn't stabilize for us, unfortunately. I wanted it to make a flag, and it didn't do it. Raymond James, I love this. Now, just look at this. It's a financial stock. Look at what happens with the options sentiment there, right after earnings, when the insiders can start participating. It did that, and that was the turning point. And it's just, we picked it up here when it went through the 50, and it's still been a good one to go for. Notice also implied volatility under the chart, nice and low there, lots of leverage if you want it. I'll show you that in a minute. Still got a few minutes. Schlumberger, controversial, we were bullish, that was right. Then SPY, let's do this one. I got one here for you. WAB, I want to show you something pretty cool on WAB, if I may. That was Hershey's. I've got something for you there. Let's have a look. WAB, where is it? WAB, I wrote a note a while back. If you had taken it here on the breakout, this is where we liked it. A 75 delta October call at this point here was up by 30% when the stock was up by 7.6. So it shows you what you can do with some nice leverage. And WAB is Westinghouse, it's dead boring, but look at the implied vol, nice and low in the early 20s there. You get nice leverage on that one. I want to show you a little bit more on that one. I would normally show you how I go and do that. This is Weyerhaeuser, same kind of deal, exactly the same area, pops above the 200 and the 50. Nice volume pops as well. So lots of buying going on here, and the option sentiment is reasonably okay. If you had done the deep in the money 70 delta January call at that point in time on that breakout there, that is now up between 85 and 100%, depending on how you measure which part of the day you got in. Look at the leverage there. The stock is up by about 12, 13%. The options were up 8 or so fold of that. Pretty cool. Just wrote that little note in the software there. Now, what else have I got for you? A lot. So I've still got time, haven't I?
You still
Doing okay.
have a couple minutes. You're doing great.
Okay, we're going through a lot. This is Hershey's. This is pretty cool. Imagine is Hershey's. Now, Hershey's was bearish. We were bearish as it did the waterfall here. Now, it's kind of potentially, earnings was yesterday, and it might form a bear flag, and it might go down further. I'm not saying whether it is or isn't. I just want to show you something very cool. We have a thing called the pricer, and in the pricer, we can say, well, what if this stock went down to a certain level by a certain time? So, for example, if we said this stock, we think it's going to go down to 220 by the 21st of August, well, let's select an option for that. Let's select, the November expiration 250, which has 70 deltas on it right now. You can see it right here, minus 70 deltas there. What would that option be worth? Well, today it's worth around 16.5. If this stock did fall to 220, if it did, and it's a big if, I'm not saying it will, but if it did, it would double in value almost in that one. That's pretty cool to know what an option might be worth. And that's a deep in the money option as well. So that drop there is only about, 10%-ish, not even, but the option would be more than, almost 2x on that one. So the leverage on a deep in the money option over 70 deltas, negative there. Just like to show you that because it's always important to know what will happen to your option position. on that one. Here's now what have I got here for you? I got some more for you, I think. Warehouser we already did, so that's cool. I'll close that window off. We're shutting down these windows nice and quickly. I'm almost done. American Express. This is an interesting one. Imagine that you felt that this stock was not going to get above 175. If that were the case. So just imagine now we're going to do a bear call spread. So imagine this is your bear call spread situation. Leg one, you are going to sell the 175 September. Leg two, you're going to buy the 180 September. What's your result on that one? Well, you can pick up a yield of around 14.5% with a cushion difference between today's price and the break even of around 7.36%. And then you've got your risk profile. You can see where do you make your money on this one. So if you were to look at your risk profile chart and say, what happens to me by the 1st of September, we can do a scenario build here and we can see exactly what happens. That's the stock price as of last night. And we can see that our maximum profit is about, I know, 63. And then where do we double that? Well, stock goes, I'm not going to go into that. That's too complex. But anyway, it's pretty cool. We can do these things with any kind of strategy that we want to do, bullish or bearish. Just wanted to show you some fun things there. If we were going to do the same thing on Farfetch, we could pick up a yield there of 20%, and it being quite far out the money. If you did the 6 and 7, if you sold the 6, bought the 7 September, you'd be looking at a yield of 20%. Is that enough? You've got a cushion there of 17%. Your break evens, around 620 odd. Let me have a look. Where is the break even on that one? About 617. What do you reckon? Well, I'd like to see it go down first before we make such a trade. But anyway, if you like options trading and analyzing what will happen to your trade over a period of time, whether it's just long or short or doing credit spreads or other spreads, I have a nice piece of kit for you there. Let me just show you another thing here. If you'd like to know about insider stuff, this is pretty cool. This is Tupperware. What was interesting about Tupperware was the OVI went nuts in early July, and then the stock went nuts.
Wow. Yeah.
After that. Now there is no question what that is, guys. That's insider stuff or incredibly good analytics. Now, of course, it doesn't happen all the time that way, and we weren't on it either. But it was just a nice one where you can see there's a lot of blatant cheating going on in the markets. And by the way, we want blatant cheating. We just don't want to be the cheats, okay? But cheating's good. You don't want a perfect market. Cheating's great because if you've got the mechanism to follow it at least some of the time, then you've got a great chance. Now, is there anything else I want to show you? Probably not. That's about it for me.
Well, that is fantastic. A lot of great stuff. And I know the slides were going fast for everybody. The recording is going to be very valuable. I love what Guy Software does, and that option stuff that he was just showing us. Boy, doesn't that simplify your life? I love it. I love it. It's fantastic. And that OVI is just, only to Guy Cohen and Wise Traders. It's a great, fantastic indicator because it's all about like what insiders are doing, what professionals are doing, because they've got the bigger pocketbooks than an individual trader typically trading an individual stock. So great stuff. Thanks for sharing that,
as well. There's the wait list. Just bit.ly. So one of our domains got taken. One of the people who owned a domain died, and so there's been a bit of rejigging. So we've had to go to bit.ly. But if you want to go on a waiting list, just pick that up, and I'll pop it in the chat just in case you're interested.
Perfect. Guy, thank you as always for sharing.
Thanks, guys. Thanks, guys.
Let's keep moving and let's find out, are there some companies that maybe we haven't been thinking about that have kind of gone undercover that we need to look at? Let's take a look, Scott, at what you have to show us. You have a great, unique way of finding these longer term trends. So let me step aside and you take it away.
Okay. Yeah. Got a few things that I think I found shocking, at least to me. We'll see if they find shocking to you. Just let me know. Is that okay? Screen good?
Absolutely. Yep. Screen is going. Yep.
Yep. Okay. We're going to talk about poor forgotten stocks. But first, again, I'm going to show you some numbers, but do not risk money you cannot afford to lose. You know what to do. All right. This is that SPY chart I mentioned. I just plopped this in. I'm so scared of what happened yesterday. But what if I was asleep all week and I walked in to look at this chart? Like, what's the problem with this weekly bar? I mean, nothing, right? So that's the problem I have with news. And even though at heart, I'm long with my money, but I'm short in my mind. I did read an interesting article today about specifically for tech stocks, that when earnings are down, because even though, right, the stocks have been going up and the earnings reports have been great versus expectations, they haven't really actually been that great numerically. When earnings are down slightly, but the market goes up, many times, almost all the time historically, the market goes up from there. Sometimes it even doubles, which seems completely backwards, but it's almost as if, well, yeah, earnings were down, but 12 months ahead, they're going to go up. So that was one of the few positive articles I've read, and that came out today too. So looking at that green bar, as scared as it's easy to be, I mean, there's nothing to be scared about, at least this second. I'm not going to go into how I analyze this. We've talked about it before, but I'm using Stan Weinstein's analysis, stage 1, stage 2, stage 3, stage 4. We want to buy after it's either fallen or it's gone sideways. Okay, so keep that picture, memorize it. 3, 2, 1. All right, it's gone. Here it is on a monthly chart. I've taken that idea and moved it into a monthly chart. This is what it looks like. Oh, it's going great, and then it's going terrible, and then you want to buy it somewhere here in a stage 1, right? Which only means after it's fallen. That's just Apple on a monthly chart, just to show you that even during the .com, you can trade this style, which just every time I come on here, it seems crazy that it's a monthly chart. Nobody wants to trade on a monthly chart, but I'm becoming addicted. And now what I'm going to show you, I put on the SPX and I went back to 1960. I've showed this before, but this is what's happened if you just follow the simple system, and you could make it better probably, but it goes from right to or left to right, it goes up. So this is based on the SPX going back decades. So it's not crazy. And the more I research it, which has been a lot, too much, it just seems to continue to produce stuff. All right, here we go. This was ARK, ARKK, poor forgotten stock, right? Monthly chart. Here it was, the glory days, right? It was above the moving average. Everything is great. This is back to 2020. And then it broke through, and it's a ridiculous fund with ridiculous picks. So much Roger Scott was here to make fun of ARK and her picks, but it fell down. Who wants to buy ARK ever, right? This is, okay, it's gone, move on. But look what's happened. It leveled off, right? This looks just like the diagram I showed you, right? Here it comes. One close above the moving average. It's a 12, by the way, 12-month simple moving average. Closed once, closed twice. And according to this crazy system that I talk about, it would be a buy at the beginning of this month, being July 2023. And look what's happened. This poor forgotten stock is up. It's a little over 10% if you would have hypothetically bought there. So poor forgotten turned into something. The QQQs, right? Look at the beating they took in the bear market. Can't trade tech anymore. Tech is going under. Meta is going under. One close above, two close above. It's up over 20% since, and this was a few months ago. So I only show you those because they've already fired off and they were poor and forgotten, kind of. They're both ETFs. I've got a few other examples. Here's one. I was thinking about this back then because I'm so smart and I'm so great and I'm sitting here by myself. I didn't trade it, so I'm not that great and I'm not that smart, huh? But look, those are jokes, by the way. Look at what's happened to Carvana. It was the best. It went from 100 to 350 and then it fell off the earth and it's never coming back and it's worthless. But we've had one close above in June, another close above. This is a theoretical, hypothetical buy at the end of this month, just a few days from now. This would follow that system. Well, I don't believe it can go up. I get it. I'm just saying you've seen what a couple of the others have done. So Carvana is actually a buy, quote unquote, not a recommendation, just showing you stuff. This one I've been looking at for a long time, Peloton. This stock is worthless. There was a Peloton store at the mall near me. It's gone. Peloton is going out of business. It's never coming back. But we've had a couple of green bars. It's not over the simple moving average yet, but I am watching this all the time. Even though it's on a monthly chart, I look at it very often just to see. I may or may not be buying this when it closes 2 times above the simple moving average, and you heard it here first. How about Zoom? Zoom. Remember the pandemic? Zoom was the greatest stock that's ever been traded in the history of history.
Yeah.
And then July of 2021, ooh, that's not good. Look at this one little green month and then red, all the way down through 2022. I mean, that is a cliff right there. Oh, it's coming back. No, it's not. It's coming back. And here it goes. Zoom is done. No one even talks about Zoom. I think we're on Zoom, correct? But no one talks about it as a stock. And oh, it's just closed above, right? This could go sideways. Could Zoom get back to 400? Nobody knows, but it's a buy on a poor forgotten stock in a month. It's not a buy yet. No one's recommending it. Here's Wayfair. I remember watching Wayfair, like, why is Wayfair doing so well during the pandemic? Oh, now I get it, right? Online shopping. This one went crazy and then we forgot about it. Oh, it tried. Nope. One close, two close. Guess what? At the open of the next month, August of 2023, Wayfair is a buy again. Isn't that crazy? Look at how far it's fallen, but that is definitely the pattern that we've seen. How about Overstock? Same genre, right? Overstock during the pandemic. Holy moly. Look at that, 20 to 120, right? And if you would have just waited for it to close below the moving average, you would have at least gotten it to 70. You would have gone from 1827 to 70 just by using this silly little ridiculous system, right? You would have missed some of that, but that's a decent gain. And look, one close, two close. Overstock is a potential buy at the end or the beginning of next month or the end of this month. Couple more. How about AMC? Has anyone ever heard of AMC? Kind of made some news back in 2021. Now, nothing is more frenetic or more psychotic than meme stock trading, right? Movies have been made, books have been written. You could have looked at a monthly chart and done nothing and known nothing, right? Look at all this going on. All the chat rooms, taking down the man, we're taking down the man. You could have just waited for two closes above, even the red bar, and it would have gone from 886 to 27. You would have missed all this, but you would have gone from 886 to 2742 doing nothing, watching nothing, worrying about nothing. And if you happen to wake up when it was around 60, you could have taken it there too. How's it doing right now? It's steadying, right? It's been in the news lately. I'm watching this one very closely because if this one steadies and starts heading up, I'm just giving you an update now, everyone. Got it? And here's GME. Anyone know ever heard of GME? Back in 2021, when all this happened, this system would have been in beforehand, right? Michael Burry started buying it way back in 19 and 20. You could have bought it in July before, right? During the pandemic, 2020. And you would have gone from $2 to $37, missing all the fun, missing all the movies being made, but you still could have made, I mean, a lifetime trade. It's coming back too. It's near the line again. So you've been warned about GME. So there are a few things that are actually trade soon, and there are a few trades that are maybe might be setting up soon. So there you go. On a long-term perspective, poor forgotten stocks are a great place to look.
Excellent. Yeah, that is great. Can you just reaffirm too for people what moving average you're using on that monthly?
It's a 12-month, so 12 simple moving average.
I had that wrong. I thought you did a 30, but is it a 30 week that you use then?
30 week.
There we go.
12 month. Yeah, don't say 20. 30 week, 12 on the monthly. Correct. Yeah. And one of these times I'll talk about the week because I love weekly trades too. I just am so fascinated by how slow moving monthly are and how you can still catch big winners without doing much at all.
Yeah. Great. Thanks for that. So I am standing corrected. I typed in the wrong thing to a couple of you. So make sure you note that on this monthly, it is a 12 month. And but sometimes he shows us the weekly, and that's a 30 weeks. So that's great. You got some good stocks, everybody, to look at and pay attention to, because these patterns mean something. And thank you, Scott, for sharing all of that. And I want to have you come back and share some more of those with us as well. And so talking about those levels that mean something, Jeffrey Turnmeyer, you were talking, that's right. You laid it all out there for us. I mean, what else could we ask for? It's right here, right there. And so, here we are begging and screaming, can you please lay it out for us again? Lay it out for us. What levels are you seeing in the market right now?
Yeah, I mean, we had some questions on that, the number of days between a pullback thing. So why don't I start there and just clarify that just
wherever you want.
Just a little bit for everybody so that we can be on the same page here. So right now, when I first pulled up this chart a few weeks back and started sharing it with people, we were at the 85th percentile. That means the current bull run off the March 13th low was in the 85th percentile of length of bull runs that we've ever experienced in the market since World War II. That's looking at the bottom, whatever the bottom was, that's part of a 3% plus pullback in the market. This lasts for however many days it lasts for. That last one we saw was March 13th. And we've been on a bullish run since then without a 3% drawdown. And so that's just, it's not a single day drawdown. It's a drawdown from the highest high, 3% plus. And on average, we get them every 47 days. The median, if you take all the moves and throw them onto a chart and like half the moves are below that, half the moves are above that, that's 38. A little bit different statistics there. So averaging the length of all the moves, it gets us to 47 because we have this one in here that's 300 days that was, over a year that we went without getting a 3% drawdown. Can we make a new one? Yeah, we can make a new record. That's what I was talking about in the head there. So right now we're sitting at, I just measured it while everybody was talking, 93 days. So we're sitting right in here, right near the 90th percentile. That seems, that means 90% of the time in the history since World War II, we would have done a 3% pullback by now.
Yeah.
So where's the odds? I like to play odds. That's saying that, 90% of the time we've done a pullback. So more likely it's we get a pullback any day now than it is that we set a new record. Can we set a new record? Sure. We can stay irrational and keep grinding higher. Like that's entirely in the realm of the market's possibility. But right there it is, 93 bars, including, looks like today, from that March 13th low back here. So keep on grinding higher without getting a 3% pullback. All right. Now, one of the things that Roger Scott likes to show off is these S5FI, NDFI. So let me pull that up real quick and talk about, I have a different way I look at the S5FI than he does. When I zoom it out, I see that we don't spend a whole lot of time hanging out above or below like the 80 on the upside and the 20 on the downside. This is stocks above their 50-day moving average for the S&P 500. We have spent several days up here. Usually we don't go longer than about 25 trading days that we hang out up here. And that's going back years and years and years. We don't spend more than about 25 days up there before we drop. And the longer we hang out up there, usually the further we drop. And if we get up into the 90s, that usually puts us down into the 20s on the correction. So this is something to keep an eye on. It's one of the measures I use. This is one of the things when I came on here back in August, I was talking about how likely we were. It's because we were right up here in the 90s. And as we all know, we went way on down into October before we made the lows. And then we shot up again, back up into the 90s, and then came back down again, back to the 20. And now we're sitting up here again, above 80. We didn't poke above 90 yet, but it's something I got my eye on. If we start breaking back down in here, probably heading back down in here. And that's just the number of S&P 500 stocks that are above their 50-day moving average right there. All kind of summarized up together. So right now, today, we're hanging out 80. This chart doesn't actually give me a live. It gives me the update at the end of the day. If you wanted to see the live one, you'd have to pop over to bar chart. And we're hanging out right at 80.9% today. So that's an interesting metric that I keep track of for overcooked potentially. And we do typically get these little fits where we bounce back and forth before we completely roll over. I mean, you see it over and over where we get these little fits where we pop up and retrace and pop up again and then roll over. So was this the rollover? I don't know. We could get one more and make a little baby head and shoulders type pattern before we break down in there. Charts are charts. They all kind of move with the same sort of patterns, but this one is an oscillator. We're not gonna see this run to 300 because 100% is 100% and 0% is 0%. So this one's never gonna break out of that 0 to 100 range. NDFI, telling a little different story. This one's down in the 75 now, but it was overcooked for quite a while before the S&P caught up to it. This one can get an outsized pullback. We haven't actually pulled back since back here in October. Even through the December pullback, we never came back to the bottom of this range. We did pop out the top and retrace deeply, but then we came back up again, lower high, higher low, and then we popped out. This may be indicating that we need a bigger correction in the market. This is just the Nasdaq 100 stocks above their 50-day moving average. And I'm not sure how we get 75.24 if we have 100. I mean, it's either 75 or 76, right? Somebody's doing some weird math. Anyway, this is the Russell stocks above their 50-day moving average, small caps. And you can see we didn't even break out over here. This is obeyed that 80-20 much more tightly. So this one kind of hanging out right here near the top of the range. Can we get a pullback? Yeah. Could we push on out higher on the small caps? Yeah, it's entirely possible. So Russell telling a little bit different story, seems to be lagging the other two indexes at this point. So Nasdaq kind of leading into a potential correction. S&P kind of hanging out in the middle, and Russell kind of lagging. That's the three indexes I keep up with to kind of gauge on the market.
Excellent.
Now,
Question for you that's in the chat there is Jeffrey, what would you like to trade to the downside if we pull back?
Well, I actually have already discussed some shorts that I put on a short yesterday that didn't last very long on XSP, which is the S&P 500's mini index. And I trade it over SPY because it's tax advantaged. If you're in the US and you're in taxable accounts, it is tax advantaged. And I leave that up to you, your financial advisor and or tax advisor to get into what's better for you to trade. SPY and potentially more liquid, but maybe not, depending on how you play it. And also SQQQ, I am in some SQQQ looking for a correction down into mid to late August. So that's exposure to that Nasdaq looking like it might be leading into the correction. And S&P was just I caught some of that lightning yesterday. I didn't expect it to go that fast, kind of like Scott talking about. It was kind of scary, but it turns out to be a nothing burger today so far, and we'll see what happens as we wrap up the rest of the day. Yeah. Now, we were talking about the FOMC too this week. We had a rate raise announcement, another quarter point. I kind of threw it out there as a theory that we may see this kind of arc off and go sideways a little bit. Potentially, we see the real market rate, the blue line, the DGS2, the 2-year constant maturity rate, actually go on another tear, more inflation, more higher interest rates before we actually see the rollover. Now, why do I keep up with this here? The orange line, the Fed funds rate, is the Fed. That's their FOMC, their set rate. They actually chase this blue line. This blue line, the 2-year Treasury constant maturity rate, that's the market rate. It's the interest rate set by the market. The Fed tends to chase this market rate. Everybody says, the narrative in the mainstream media is that the Fed sets the rate. Well, guess what? They're always chasing the rate. And it's been that way since pretty much as long as I've been trading back here in the 90s. They've always been chasing the market. And every time we get one of these periods where the Fed funds rate exceeds the actual market rate for, say, 5 to 7 months or so, we tend to get a market meltdown, freak out financial crisis of some sort. Back here in the 99, 2000 area, anybody remember what happened there? Maybe a .com bust.
Maybe.
And then great financial crisis, housing bust here in 2008. And then we had an interest rate meltdown right here in the late 18, 19, late 18s into 19s. For those of us that were trading, that was a rough pullback. And then that actually extended right into COVID, where we dropped it out to zero, hung out at the bottom. And now we've raised rates at one of the fastest paces in history. And we could go sideways a little bit before we actually get the real cross up here somewhere. That might be interest rates that nobody's counting on seeing that kind of high interest rates. So be careful, know what you're, keep an eye out, like know what your plan is. Where could you be wrong? If you're listening to the mainstream media and their narrative about, we think they're going to cut rates again, and, maybe they go higher from here. Do you think we're all going to be able to afford things when they're twice as expensive? Cars go up, double what they are now. Those $40,000 cars or $80,000 cars, it's going to be a life-changing experience. But that's not unlike what happened in the 80s. I wasn't a consumer back in the 80s, but 70s, 80s. I hear that these high interest rates and the crazy inflation led to people that had borrowed money for school. All of a sudden it was laughable. Like we could pay it off in a couple months now. So these crazy loans and student loans and car loans, maybe it'll be laughable by the time we get up here. We'll see.
Interesting. Very interesting. Just to clarify real quick too, Jeffrey, for people
Yeah.
asking, that what the platform you're looking at right there is TradingView. Is that right?
Yeah, this is TradingView. It is 100% free to use. Like you can pull up all of these charts and all this information that I've done here today on TradingView for free. Most people think it costs money. It does not. You can open a basic free account and pull every one of these charts that I'm showing you here today. I really love this platform for that very reason. I think Scott was using some TradingView there too.
Yeah, it is. Yeah, you got me turned on to that too. It is a nice little free thing to go check, and you can put all those different types of indicators on. It makes it easy. So what are your thoughts? Question here about liquidity. And, we had that conversation last week on Ask the Pros with liquidity and anticipating it to drop drastically in the next few months, or do you have an opinion on that?
Let me pull up this
Liquidity.
I've got a little secret thing hidden down here. We can
Ooh,
talk
we love
about.
secrets.
Show
On
TradingView,
reveal
on
it all.
TradingView here, there is a little thing right here called net liquidity.
Interesting. There you go. Whew, worth the price of
And
admission.
this indicator, let me minimize that. You can actually see the code behind this indicator if you want to. It's kind of like an RSI type indicator. And they've kind of done some math to liquidity. And this is called News Age, I think it is. Let's see if I can find the name of it. I probably have it favorited. Yeah, it's right there. NEWZAGE, Fed Net Liquidity, right there. That one. So if you want to add that to your chart, right there it is. Right now, red ones are zones where the market may pull back. This is yet another reason why I'm kind of not really fearful, but cautious on getting a major pullback. This one does tend to put a green bar at bottoms or near bottoms, and then red ones near where we get tops. And right now we've been hitting some red bars and staying red. So this has got me cautious that we may see a bigger correction in the market.
Well,
So
I think it's time now then to spill the beans, Jeffrey. How do you get 52 winners in a row in markets like these when you say, well, I'm a little bit cautious, or, oh, I'm all in, or, oh, I don't know about, this, we're going here, we're going there. How do you do that?
So on Monday, I'm going to reveal my income glitch. I've actually been working with a group of traders. It's a relatively small group, about 155-ish people, that we have a special trade that we take advantage of the market that gives us extreme downside protection, like 2 standard deviations worth of downside protection. And, somewhere in the neighborhood of 10 to 14 days, it tends to pay out. And then we close it and get out and go on to the next trade. And I want to give you an opportunity to get into on this. Oh, I need to go back to the head of the slideshow here. So I want to thank everybody for joining me. And instead of charging anything, we're going to give you a special free surprise here today for joining us. And if you know me, I love finding weird market anomalies. I've talked about them here. I've shown you some stuff that mainstream media doesn't talk about. And I tend to take those and run with them and find ways to take advantage of them. Like my Bitcoin loophole strategy that's, allowed anybody to get target gains without getting into the crypto market, without even getting in a risky coin, or the 60-minute surges that I take advantage of overnight gaps that snap right back on one particular ticker. And it's all by trading one pattern, one ticker right after the opening bell. But all that doesn't really hold a candle to the weird market anomaly that I'm going to reveal on Monday, July 31st. That's next Monday at 1 p.m. Eastern. And I want to invite you. You see, I spent the last year with that group of 154 traders taking advantage of mispricing in one specific ticker. And this isn't like the market is mispriced, because the prices in the market are one of the only truths. But compared to what it should be priced at, based on all the numbers that we're told in the standard, decay of options and things in the market, this mispricing is there and it's consistent. And we've been able to pull 52 trades in a row without a single loser. And this is, you may say, well, what have the losses been? We haven't had a single loss. since I released this to this small group of traders. And we've seen win, you see the wins scrolling on the screen right there. And let me say that again. That's 52 trades with 0 losses along the way. I call it the income glitch. It's allowed traders to pocket a few $100 each and every trade with 100% success rate. I usually trade it the size of 1, but there's some people that trade it many more contracts more than that. And I just want to be clear, this isn't some crazy curve fit backtest theory. No, I actually hashed this out with real money, and then we put it to a track record, proved it, and then we launched it, and it still has proved to be a winner. And I put my hard-earned money on these trades, and I'm that confident in them. So if you want a sneak peek on exactly what kind of income glitches these are and how you can keep winning all the way through these crazy markets and you just don't know what to do, I've got a free income report. Instead of charging money for it, we're going to give it to you free just for coming today and clicking the link right there, jeffreytrader.com/glitch report. Go sign up today. Click the link in the chat. That way on Monday, you have the chance to get in on what would quite possibly be my 53rd win in a row. And I'm thinking we could probably go maybe at least 100, possibly 200 trades before we ever get a loss. I'm that confident in this kind of system right here. So that's jeffreytrader.com/glitch report. Put your information in there and we will get you that report right out to you.
Thank you for sharing that. I mean, anytime you're a trader that is 52 trades in a row, 100% accurate. I mean, that's crazy. And Adam has posted the link. You don't need to call a cell phone number. You just click that link and get right in and get that free report. You can download it and read it over the weekend and then get ready and be in Jeffrey's event then at 1 o'clock on Monday. So, I think it's going to be fantastic. Everybody loves Jeffrey when he comes to Ask the Pros and the insight and the levels and everything. So I know you're going to want to just go get that free report and then put it on your calendar to join Jeffrey then on Monday as well. So yeah, cool. Congratulations on that track record. Jeffrey says, yeah.
Hey, Jeff Smith and I have been debating on it. It is related to, one of the tickers that we discussed here months and months ago at this point, and he kind of challenged me to come up with something that was better than his win rate. And so far, 52 wins in a row pretty much obliterates his win rate. So,
yeah. So yeah, so yeah, and it's downloadable to the computer, right? I mean, you can, if you're on your computer, you get it right there. And if you write down the link, if you need it and you want to download it onto your computer, I'm sure you can go to that link as well and download it there as well. So great content always that Jeff brings our way. Great content. Every week on Ask the Pros, we have a lot of great information. So yeah, maybe somebody who is online can help out Michael get it another way. But yeah, everybody can download it there on your computer as long as you have a computer. So anyway,
I know that customer service is armed with the report. If you send an email into support@jeffreytrader.com, they should be able to snap you right back that link to that report instead of having to do whatever it is the website wants you to do.
Yeah. Hey, maybe, and if you're type in that email us if you're having trouble getting that report. If you want to type in your email address, we'll make sure you get that too. So in case anybody's having issues, so just type that in. We will get it to the right people. And there is Jeffrey just put in that email, support@jeffreytrader.com. So you can go there as well and get it. All right. So, I mean, what's the secret, Jeffrey, to getting 52 trades, in a row? What's the secret? You shared another secret with us.
Yeah, there's a secret anomaly that I found in an options chain related to, and the ticker, I'll give it away here. It's XSP.
Ooh,
it's
all right.
You can't actually buy shares of XSP, but you can trade options, and they are tax advantaged options. And there's a special place in the expirations and in the strikes that creates what I call a gamma glitch. To get way nerdy on it. And it represents a mispricing when you compare it against normal options pricing models. And I figured out how to take advantage of it. It did take us, it took me and a group of traders probably almost a year to hash out how to actually take advantage of it. And then we proved it out in a track record, and then we launched it publicly. And then the public track record is 52 trades of wins in published trades. So I'm giving everybody an opportunity to find out what this income glitch is on Monday.
Oh, that's going to be great. That is going to be great. And Adam has typed this in too. He said, and so make sure y'all do that. If you're having trouble getting the report, go to that link that Adam has typed in there, support@prosperitypub.com. And if you're having issues getting that report, so email them at support@prosperitypub.com. So yeah, Ray says, love those gamma glitches, and leave it to Jeffrey Turnmeyer to uncover all of that. We love it when you get nerdy on us, because your nerdy stuff turns into lots of money for us, and we like that. So that's why we're here, to make money. So anything else to add to that, Jeffrey, before we let you all go for the great weekend?
I mean, unless somebody's got a final question, I think that's come join me on Monday. That's the
What else
that's the
is
big
there?
reveal.
The big reveal. 52 winners in a row. Why don't you go make 53? Fantastic. So thank you so much for being with us, Jeffrey. Thank you, Guy. Thank you, Scott, for being with us. Fantastic content, everybody. So have a great weekend, and we'll see everybody here back next week on Ask the Pros, and go get that report right away. You got the instructions. If you're having trouble getting that report, just go to that prosperitypub.com email address, support@prosperitypub.com, and get it and read it. Thanks, everybody. Thanks for being with us. See y'all next week.